Hey there, everyone. Happy Monday. It's May 20th. Welcome to the Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at Stockcharts.com. The pretty sunny Redmond, Washington. Thanks for joining us every weekday after the close as we break down the market action using the best practices of technical analysis. Technical analysis is a practical toolkit, and the Stockcharts platform was created to empower individual investors, financial advisors, even institutional investors to better understand the markets around them using that discipline of technical analysis. Now, technical analysis is by definition about what the markets are doing. It's about how investors are voting with their capital, all those buy and sell decisions aggregating up into some key movements on the charts. As you'll see, the S&P, the NASDAQ, the Dow, either at or very near all-time highs. Bit of distribution coming through the course of the day today. Let's get to our market recap and look at how the charts evolved as we tease those all-time highs. Before we look at the charts, we do have a poll question we had running on our social media platforms here recently. We asked you, how are you changing your portfolio recently in terms of risk? Quite a bit of differentiation here. I guess a widespread of votes. 28% of you are taking some risk off. These are the skeptics looking at the new all-time highs with a great amount of reserve. About 37% of you, the most common response, keeping it about the same, which leaves 35% taking on some additional new risk. Now, it's interesting, that question, and I hope, if nothing else, helps you think about what you should be doing or what you could be doing as the market makes new all-time highs. I'm writing a newsletter for Market Misbehavior today, and one of the quotes we use was my famous Ed Seykota quote, who said, "The trend is your friend until the end when it bends." His comment was, follow the trend as long as it keeps going. Always be looking for signs of a trend reversal. That's what Tom DeMark really, in a lot of ways, made a career out of, identifying exhaustion points and trends and identifying those reversals. Larry Williams, who joined me here in the Stockcharts TV studio last week, at times has been a great contrarian, identifying when to buy at lows and sell at highs. So they did all very well at recognizing when the evidence has shifted. Let's try to do that together here on the Final Bar. Maybe not today, because overall I would say the trends are still fairly constructive here, but let's look at how the trends evolved in today's trading session. The Dow actually slightly lower. The Dow Jones Industrial Average down about 0.5%, finished the day just below 39,810. The S&P 500 closed the day around 5308. That's up just slightly from Friday's close. The NASDAQ Composite leading the way higher, up 0.7% to just below 16,800. Mid caps and small caps essentially flat for the day. So the major S&P large, mid, small cap averages, no real change. The big outlier was the NASDAQ moving higher. The Dow, of course, moving slightly lower. The VIX overall popped up just a little bit. As of Friday's close, we were just barely below 12 for the first time in I don't know how long, but it's been a long time since we've had an 11 handle on the VIX. We did bounce just slightly up to just above 12 to finish the day today. So overall volatility, of course, remains incredibly low. There's a low volatility bullish trend by any stretch of the imagination. Looking at interest rates, you can see the yield curve for the most part drifting higher today. The 10-year, 5-year, 30-year points all up slightly. The 10-year yield, which we tend to focus on the most, right around 4.44. So we're still sort of in that range that we've been in for quite some time for rates. Rates really haven't pushed higher in a way that would concern me for growth stocks leading the way up. But overall, 10-year yield remains where it is. Overall, growth stocks are doing just fine in that environment. Bond prices moving slightly lower, with the TLT down about 1/3%. The dollar popping up just a little bit off of Friday's close. Commodities mostly in the green today. You can see gold and silver moving up. The GLD was up 0.4%. Silver prices up 0.7%. Crude oil prices down slightly, but most of the other commodities that we track using ETFs on this page, mostly in the green. And that gold trade continues to push to the upside. Gold and precious metals. Bitcoin, honestly, in the last couple hours has accelerated to the upside as we're going, recording the show here after the equity close on Monday. We have Bitcoin pushing back above 70,000. It's been a little while since we've gotten back above that level. That's up about 6%. Ether prices up big time, up about 12% to 34.42. So, it's interesting, that traditional relationship of the Bitcoin halving and then a big expansion in Bitcoin has been the story. Every other halving, and this one we haven't really seen that upside momentum yet. Today, you're seeing it push to the upside. I haven't looked to see if there's additional news maybe driving Bitcoin prices higher. But the good thing about charts is you don't need to necessarily understand the why. You focus on the levels and the movements and the trends. And for now, Bitcoin's certainly giving a thumbs up. We'll look at the chart of Bitcoin here in a few moments if we can. Looking at the 11 S&P sectors, you can see technology up number 1. XLK is up 1.2%. Communication services, industrials, materials all moving higher as well. The other 7 S&P sectors all in the red. Financials actually the worst performer. I was looking at JP Morgan before we started. Had a pretty rough day, down almost maybe 4 or 5% if I remember right. Consumer discretionary, the XLY, second from the bottom, down about 0.75%. And real estate, the XLRE, and consumer staples, both down about 2/3%. Looking down here, the market trend model, of course, remains bullish for stocks across the board, large cap, mid cap, small cap, the NASDAQ. You can click on the Keller market trend model widget here and switch to stocks model if you want to look at those particular signals. I'm looking at what I call the macro model, looking at just 4 major asset classes: stocks, bonds, commodities, and the US dollar. And you can see that stocks and commodities overall bullish across the board. You can see how there's a divergence with the dollar obviously showing a bit of weakness here on the short-term time frame, but still medium-term, long-term pretty healthy. And I think that's the risk for stocks here. Maybe one of them is that the dollar sort of rotates higher because that has usually meant a sell-off for risk assets like equities. But for now, no real danger of that. Looking at the growth leadership names, as we might call the Magnificent Seven, Netflix having a strong day up over 3%, NVIDIA up 2.5%. Some of these semiconductor names, which had pulled back quite a bit there in early April, really recovering from that sell-off in the end of April, now into the beginning of May, looking a lot stronger. NVIDIA and those other mega cap semiconductor names all pushing to the upside. We did our top 10 charts to watch in May 2024 on Friday, Grace and Rose and I. We did include a semiconductor name, but I forget which one. So make sure you watch it to see which one we went through. I think it was Grayson that picked one of them, but 9 other interesting stocks to reflect on as well. Tesla, Meta, Amazon, all going later. And we'll continue on here looking at Amazon. Then we'll look at some equity things. Thinking about or some other macro items. With Amazon is a concern mainly because of this bearish momentum divergence, which we've highlighted, right? The highs April into May, prices going higher, but the momentum actually sloping downward. So weaker momentum as it attempts to make a new all-time high there around 190 just a couple of weeks ago. And so stocks moving higher, making new highs on weaker momentum is often the sign of a major top. We highlighted on, I think, Thursday's show of last week, John Deere with a similar pattern going into last week. You had the higher highs, weaker momentum. Of course, we gapped lower. I think that was Thursday of last week, and now continuing to drift higher today. So the risk for a market like this, right, as you see stocks going higher, as you see the trends continuing up and to the right, I would argue your goal as a trend follower should be follow those trends and hold on to those things that are winning as long as they keep winning, but always be looking for signs of what we call a change of character, signs that something might be different. And often something like a breadth indicator or price momentum using an indicator like the RSI, that a lot of times can help you identify those potential turning points before they come, right? Because it'll tell you when there's maybe a negative rotation before that actually pops up and is reflected in price action. Let's look at a bit of breadth analysis here as it's Monday, and we like to check in on the breadth. Over the weekend, I was writing a note for my premium members at Market Misbehavior. We talked about the breadth conditions, which overall are quite robust, to be honest with you. Very few breadth indicators I think I could find that are anything but pretty constructive. I'm thinking of one I'll show you in a minute, the bullish percent index, which is not giving a sell signal yet, but nearing that sort of threshold where you start to look for a negative signal. But the advanced decline lines are all moving higher. We have a healthy number of new 52-week highs over the last week, which is all pretty encouraging. The S&P, of course, here making a new price high. And what you look for when the market's making a new high is you want a broad advance as defined by breadth indicators improving. Here we have the percent of stocks above their 200-day. It's currently right around 80%. That's really where it's been since the end of last year. It's fluctuated between 70, 80 some percent, but overall we're kind of right around the levels that it's been. So the long-term trend has really not been in question, over the last couple of months. I mean, from the end of last year on, we've had strong numbers in terms of the percent of stocks holding their long-term moving averages. It's the short term that looked pretty questionable there in mid-April, but something like the percent of stocks above their 50-day moving average turned lower the second week in April. First week in May turns back positive, and for now we remain bullish here. So what I would look for in a chart like this is, does the green line here, the percent of stocks above their 50-day, fail to hold 50%? We will have a pullback at some point. Do we hold 50%? Then that's pretty good. If we don't, then it's not a guarantee that it's going to be the end of the world, but it certainly tells me to revisit that bullish thesis and just look at some of the stocks that comprise those indexes and see if they're still continuing to show those gains. Overall, that sort of breadth analysis pretty strong here. The bullish percent index uses point and figure charts as a way of analyzing the trends on a basket of stocks here, looking at the S&P 500. I've also run it on the NASDAQ 100, and we look at that pretty often. We do have these bullish percent indexes for different sectors and all sorts of different groups of stocks if you're interested. But looking here at the S&P 500's bullish percent index, when this index gets above 70%, that usually means we are not at the top, but it usually means we're nearing the top. That tells me we're sort of in the 8th or 9th inning as opposed to 2nd or 3rd inning of an uptrend phase. So you can see, for example, just here at the July-August peak, we went above 70% here in early July, right around 4th of July. We moved higher for about another month almost before, in the beginning of August, we rotated back below 70%. That's the sell signal. Here in November of 2022, we went above the 70% level. We went even higher for a short while, a couple weeks, before we broke down below 70%. So most recently, at the April high, we had a great signal there where we broke above 70% at the end of February. We stayed above there for about a month. Then the first week in April, we break down below 70%. So that's what you're looking for here. You initiate the signal by going above 70%. We're kind of right there, but we've never really gotten above there just yet. When we do, or if and when we do, that's where it sort of initiates this sort of topping program, for lack of a better term. So you look to see when it breaks back below the 70% line. That's usually a sign that whatever momentum, all that strength that has been driving the markets higher, all those stocks that are in uptrends on their point and figure charts, things are starting to change, and those bullish charts are starting to unwind a little bit. For now, again, still telling me that conditions are just fine. I want to go to the intermarket charts. These are all my non-equity charts that I reflect on every day. I do want to bring up the chart of Bitcoin, Ethereum, all very constructive developments here over the last 24 hours or so. So you can see Bitcoin sort of right around that 70,000 level, push back above 70,000 today for the first time since early April, right? If you remember, if you know your recent Bitcoin history, we sort of pushed above 50, 60, above 70,000. We peaked here at a new high around 74,000, but from there, we pulled back into right around 38.2% of the rally off the January low. From there, we sort of traded around this range, and arguably, we've just had failed breakdowns of that 60,000 level a couple different times in mid-April, in early May, and there in mid-May. And now all of a sudden, we're threatening the upper end of the range. So if you think about this as a big basing pattern or a consolidation pattern, you're really looking for a breakout to the upside. Getting above 70,000 would be a nice move. Getting to a new high, I think, would complete that rotation and suggest much further upside. 72,000, sort of the resistance from March and April that I'd sort of be looking at here. We're very, very close. So can we get a foothold above the 70,000 level and hold it? Remember, big round numbers have often been very meaningful for Bitcoin. We've often rotated around those points, and finally eclipsing that level and breaking to the upside could be very, very meaningful. Let's finish off here looking at some individual names. We have cruise lines toward the top of the list here, looking at the leaderboard for the S&P 500. This is Carnival Cruise Lines, CCL. And if you look at Carnival Corp, I'm just using a simple trendline analysis, taking the December high and the March high and connecting that to where we're at. So when you have a big move like we have today, impressive that we get back above moving average resistance. I think that's a good thing. Impressive that the RSI is pushed above 60. I think that's a good thing as well, because notice how that did not happen in March. In a bearish phase, you often have markets going down, and the lower highs in price usually have the RSI stalling out around 60. that's now changing. You're seeing a new swing high on stronger momentum. That's actually pretty encouraging. I'd love to see it get above this trend line, right? And so trend line analysis for me is not the be all and end all. It's not my favorite trading system in the world, but it is a beautifully simple and brilliant visual cue to recognize when a trend is changing, right? I'm defining this downtrend by connecting the high prices and recognizing the downtrend in these market peaks. At some point, that trend is going to be broken. We'll break out to the upside, and just waiting for a breakup of that trend line could be a nice balance of giving the market room to rally a little bit, but waiting for a significant enough move to tell you that the trend is reversing. So a little bit further, and Carnival could push to the upside. Some of the other cruise lines, of course, all moving up as well. Home Depot is another one actually looking a little weaker here. I'm highlighting Home Depot as a potential bear flag pattern. A bear flag pattern, as I customize the lines here, is where you have a big move down and then you have sort of this, upward move, counter trend to the longer term uptrend. And on our platform, if you hold down the command key on the keyboard and drag, you'll get a parallel line from the first trend line. So this is the bear flag pattern. So you have a big move lower. We have this parallel trend channel against the larger trend. So higher highs, higher lows on a shorter time frame. A break below the lower boundary of that bear flag would basically, simply suggest, okay, and sorry, I'm talking as I draw here. We take the move into that, pattern, and then we basically consider a parallel move lower. So if we do that, and then we add a little open space here so we can add some free bars here on the edge. So what we're going to do then is just kind of see the extra space here. Where do we go? There we go. Nope. How do we update this at the bottom? Update chart. No. All right, this is not letting me do so. Yeah, it's not letting me add the extra bar. Sorry for that. But basically, that's just a way to sort of give yourself some empty space on the right. This would measure down. If this is a bear flag pattern of a downtrend, then this counter trend move higher called the bear flag. That pattern is confirmed when we break down through the lower boundary. Also note that would take us below the 200-day moving average, and that would measure a minimum downside objective, basically retesting the fourth quarter 23 low, just below 290, we'll call it 287 or so. So a lot weighing on, I think, Home Depot here from a technical perspective. We hold 330, and this is probably not a bear flag pattern, but something more, maybe more of an improvement. But we break below 330, that would really validate that bear flag pattern, measure much lower. All right, I'm looking at the chart of Zoom Video Communications. Not a lot of earnings. We're sort of winding down the bulk of earnings season. So usually between earnings, the bulk of earnings season is kind of a 3-week period. We have a lot of companies reporting. Then you have a lot of consumer names, kind of random things between those earnings because until you get to the next one. So it's sort of a lighter stretch of earnings here this week. But Zoom Video Communications, they are reporting after the close today. I'm bringing this chart up to just show you that on a weekly basis, on a daily basis, this is a sideways trend, right? So while we could have some movement around earnings, and that would certainly be encouraging if you get a bounce higher, this is a stock that has been literally range bound for months, if not years, right? We're currently at $64. That's pretty much where we were at the end of 2022. So in an entire period since then, almost a year and a half, we have gone nowhere. We have gone sideways. The weekly chart just shows you how long this has been in a sideways move. So basically, the market's telling you this stock's worth around $65 a share, and we just keep bouncing above and below that level. I would say a break above 75 would be a change. That would be something different. But that means we have to go up another 11 points just to get out of that basing pattern. So I think Zoom, one of those charts, it's sort of a sit on your hands and wait type of pattern. If that's one that makes sense to you, I don't think it's a great opportunity just yet. Look for signs of accumulation. Haven't seen that yet. Where you are seeing some signs of accumulation are some of these top-ranked names. The top-ranked stock in our Stockcharts technical ranking, the scooter ranking, 99.9th percentile is MicroStrategy MSTR. This is an AI play, of course. Now, it hit 2,000 end of March. Here in late April, early May, it got halved. It got haircut by 50% down to 1,000. All of a sudden, it's back 75% gain off of that level to get up to 1730 or so, which is where we're at. I just want to highlight, though, if you use the Fibonacci retracements, which I often find a helpful way of just making sense of things after a big move. So take the low in January, take the high in March. You can see 38.2%, that initial bounce, 61.8%, right around there, just around 1040. So the fact that we found support there and pushed higher makes a good amount of sense. This is why these levels I find super helpful. When you've had a big move and we start selling off, put these levels as a framework where you might anticipate some key support levels. Now that we're back above moving averages, we're making higher lows and higher highs, certainly suggests a return back to retest the previous highs around 2,000. It's up another 9% today. So MicroStrategy is certainly starting to improve. Just a couple other names to finish off. Netflix very, very close to making a new 52-week high. Certainly looks like it did so. At least made a new closing high for sure. It's up over 3% today, just above 640. And overall, that is really speaking to the strength there. It does look like we got to just above there. 644 is your high for the 52 weeks. But we're kind of right around there, right? And on a closing basis, certainly looks like we made a new high here. So, you know, the story with charts like Netflix, same with something like MicroStrategy, Super Microcomputer, SMCI, and others, they all got dinged pretty heavily in the beginning of April. Then late April, early May, they've now started to recover, and now it's about whether they make new highs. Now, some things like the S&P, of course, have broken out, like the NASDAQ has broken out. Still waiting on Netflix, but you know the potential for those major benchmarks to keep pushing higher, I would argue, is driven by mega cap names like a Netflix, and even more so names like Alphabet and others that really dominate on a market cap basis and see if they can push things higher. We'll have to wrap it with Robinhood, which is again similar to a Netflix, but did get it above there, get to a new 52-week closing high. Close above $20 a share here today, which is a nice upward close and a nice new breakout for this name. The reason why I think it's an interesting chart to highlight is if you look at the bounce off of the November low last year, we pulled back to make a higher low in January. We then gapped higher and pushed above the December peak. We made a new high in March around $20. We pulled back to around $16.50. The 50-day moving average did not hold, but we ended up finding support there. We keep making the stepwise motion higher, and look at what happened this last time. We had that nice support. We broke to new highs, and that really propelled the stock to new upside. Is that the next move for Robinhood? I don't know, and I don't think any of us really know for sure, but what I will tell you is watching the charts closely, using techniques like the chandelier exit as a trailing stop can be a profitable way of riding breakout names higher and higher. Folks, that is a wrap for the show. That's our market recap, and that's all we'll get to today. A lot of great guests lined up for the rest of the week, so we'll look forward to sharing some great perspectives with you. For Stockcharts and Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night. Hi, donkey.